Well, welcome to the wheelhouse. Boy, oh boy, do I have a lot to talk to you guys about, and I really just want to apologize up front that a lot of it is not the best news, but there's a lot of news and a lot on my mind and a lot I'd like to discuss. It probably would help a lot of people out to get an understanding if you haven't been in the markets long and you don't really understand, what's going on. I have been in the markets a long time, and I have dealt with this kind of stuff. I mean, everything is always a little new and a little different, but relatively, it's the same kind of thing, right? And I have my thumb on, what's going on, kind of what I'm expecting to happen, and I can walk you guys through that. Kind of put you up, in the know of kind of what's going on, and hopefully it helps. But unfortunately, there's not a ton of wonderful news going on right now. I mean, we have, well, let's just take a look at the screen here. The Dow finished 460 points down again. Major reversal triggered by first U.S. Omicron case. All right, so, in the morning, we had a big green morning. There was a lot going on. I'm going to walk you through specific precision tactical trades that I did for the Wheelhouse Trading Group. I got in very, very good. I got out very, very good at the tops. Hopefully, people took those trades in that group and made money with me. I was actually quite proud of how sniper style I got in and I got out on I made a lot of really good plays. But the end of the day, intraday, towards the end of the close, I mean, there was a big sell-off. I mean, you get a lot of the institutions are selling off. There's distribution going on all the indexes. The Dow is down by the 200, like I mentioned in yesterday's video that I was worried it was approaching. The NASDAQ is flirting with the 50. It's not good. The Russell's below the 200. It's bad. And just in yesterday's video, I told you what was going to happen. I mean, literally, I'm like a day ahead on most of my videos. I said yesterday that, stay out of momentum, stay out of SPAC, stay out of speculative, and then everybody's going to be getting rid of those first. Then they're going to get rid of small cap and then mid cap, and everything's going to push up to the Apples and the Microsofts, which we bought yesterday, Apple. And I actually had everybody sell Apple today at the very top. And right after I sent that alert, it went down $5. We made I think an $8 or $9 gain on that trade from yesterday to today. Got out at the top. I also picked up Microsoft. Didn't want to sell Microsoft, but we're not in a buy and hold type market. I bought Microsoft. I made, it went up $7. I made like $5 on it, and I saw it was turning, and I'll walk you through the charts, and I got out at the top right when it was turning. I put an alert out. Same thing with On Semiconductor, made a bunch of money on that. Bought into that a couple days ago. It launched yesterday, it launched today, and then I saw a turn. I got everybody out at the very top. So I was happy about that. I had a couple that I took with real tight stops that did get stopped. One was Coinbase. I lost $2.50 on that real quick. It's just tied to Bitcoin, and with all this news and media going on. And again, I mentioned on yesterday's video that you really shouldn't do much when there's going to be a big media cycle and big news cycle coming out. I kind of said that was going to happen because that's just what happens. You have a new variant, guys. You have there's going to be news about that, whether it's the lab testing, it's good, it's bad, our vaccines work, they don't. All this is going to come out, right? On top of that, you got inflation. You got what Jay Powell said the other day with Janet Yellen in the congressional hearing. He's taking away transitory. He's finally letting people know the truth that inflation is here to stay. It still blows my mind that people believed that inflation was going to go away. Especially, I'm not talking about people like you. It blows my mind that people in Congress or senators, congressmen and senators would believe. I guess maybe that's just not their job and they rely on the Fed so much, but I would think that they're educated enough to know that inflation is never transitory. It It never has. Inflation can last a decade, guys. I mean, it's a sticky situation when you get up there. And it's not just us, guys. This is global inflation. It's happening all over the world. Okay, you think ours is high at 6%? Like, there's multiple countries that are up there too. We're not alone. This is a thing. Okay, and so now you're in this sticky situation. You printed all this money. Now you have all this inflation. You had to print the money, you had to do the stimulus because you had a pandemic, okay? That happens every 100 years or so. You got a pandemic, you print a whole bunch of money, you inflate, crypto goes up on inflation, money supply goes up, and, inflation's going to show up. Well, here we are, it's showing up, and now they're talking about tapering, which is going to, slow down the tapering, the spending on the bonds. That's going to hurt tech. And, but, you think it'd be good for financials, which it should be, because when interest rates go up and people lend money and they can get a higher rate, well, they're going to have better quarterly earnings. Investors like quarterly earnings. But honestly, I don't think fundamentals or technical analysis matters in this market. We're in a seesaw market, my people. It's just, you got to be like, literally, I told you guys yesterday, you only move forward. You don't go sideways and you don't move backwards. So just stand still if you don't know what to do and just, you got a thing behind you and they're shooting at you, you just stand right there and just don't get shot, And unless you're in my group and you got me as your coach as a total ninja assassin sniper that knows how to get nasty on a 1-minute pivot and ride these things up and get out of the top. But if you don't have somebody like that knows what they're doing, don't even try. Don't even dare do it in this market. This is like highly advanced trading. The only reason I was able to be so successful at it is because I've been doing it for so long, and I know exactly what to look for. Normally I don't day trade Microsoft, but I know the flight of safety, and everything's being sold from the small stuff and being moved to the flight of safety, the mega caps. So I take that info and I choose that, and I know the volatility. It could go 700, 1200, or $7-12 on something like that per 100 shares, and it did. Same with what's the other one I caught? I caught one today for the group. It was a $15 gain in 30 minutes, in and out, boom, boom, $15 gain in 30 minutes. But if you don't know how to be a super ninja assassin, like rooftop ninja that you can't even hear coming and just whoosh, you're dead before you even know what happened, like, don't even try, guys. You just click that Discord link below and you get in my Discord. You start talking to me. Let me be your coach. Become a Jedi. Start your Jedi training, and we'll take you down that path. But if you don't know that stuff, don't be doing it right now. It's just too crazy. Just stand still. If you're at profits on stuff, I would say take them. If you have a little bit of loss, like I said in the last couple of day videos, you might want to just move that money to the side. If you're at a big loss, just hold. Don't average down. Don't do that. Okay, just wait. Just wait for the dust to settle. We don't know how long this problem is going to happen, and I'm going to go over that. There is some seriously concerning things that we need to discuss, and I don't even know where to start. I had to make notes and prepare all these different things I want to go over. I can make 7, 8 videos with what I'm going to talk about. There's so much to talk about, but I hope that I become your little morning show, and I'm gonna just hook you up. Again, I wish I could just give you a whole bunch of good information. I'm a bull. I like to be a bull, but I also, instead of just like kind of sugarcoating things, like I always just want to keep it real. Like I'm just that kind of dude. Like I just want to keep it real. I want you guys to be on this channel and subscribe to this channel and getting notifications, because that when you come to this channel, you get it real, and you get it from a guy that's been in the markets for a long, long time as a professional trader, and has been a CIO and CEO of 3 global companies, and just done a lot of things in my life. But yeah, man, I will navigate this and help you guys, but God, I don't even know where to start. Let's start with, let's go ahead and just start with, just too much to start with. Let's go ahead and start with Dr. Fauci and let him address what's going on with the first U.S. case of Omicron found in the United States.
As some of you may have heard, the California and San Francisco Departments of Public Health and the CDC have confirmed that a recent case of COVID-19 among an individual in California was caused by the Omicron variant. Genomic sequencing was conducted at the University of California at San Francisco, and the sequence was confirmed at the CDC as being consistent with the Omicron variant. So I know there are a lot of questions, but here's what we know right now. The individual was a traveler who returned from South Africa on November the 22nd and tested positive on November the 29th. The individual is self-quarantining, and all close contacts have been contacted, and all close contacts thus far have tested negative. The individual was fully vaccinated and experienced mild symptoms, which are improving at this point. So this is the first confirmed case of COVID-19 caused by the Omicron variant detected in the United States. And as all of you know, because we've been discussing this, we knew that it was just a matter of time before the first case of Omicron would be detected in the United States. And as you know, we know, I've been saying it, and my colleagues on the medical team and others have been saying it, we know what we need to do to protect people. Get vaccinated if you're not already vaccinated. Get boosted if you've been vaccinated for more than 6 months with an mRNA or 2 months with J&J. And all the other things we've been talking about getting your children vaccinated, masking in indoor congregate settings.
Yeah, so there you have it. We have an infected Omicron person in the United States, came from South Africa, was in San Francisco, was tested, is in quarantine currently, and the results were sent to the CDC, who confirmed that the sequence of the strain is Omicron. So we do have somebody here in the US. Everybody that came in contact with that person and has been around that person has also been tested, and no positive results on those tests. So, you know, we're just waiting for more information. That's really the information that we have. You know, I mentioned earlier, you know, Jay Powell and Janet Yellen were in Congress, and they, you know, they were grilled on many levels about a lot of different things. And, you know, I just, you know, on CNBC, it says right here, Powell's pivot on inflation turns the trader pandemic playbook on its head. Yeah, no doubt. Definitely throws a monkey wrench into things. And, you know, there's a lot of changes going on. You know, you're going to notice that your stuff that was doing good, like Airbnb, it's going to go down because people don't know if there's going to be a lockdown. So are people really going to be traveling to Vegas? Are they really going to be using Airbnb? Are they really going to be flying or doing Carnival cruises? Going to Disneyland. Disneyland's at its 52-week low. So yeah, changes, and changes. You got to be adaptable. Okay, got to be a Jedi. You got to be a ninja assassin. It's the only way. Or you just sit on the sidelines and wait it out. You know, either way. But yeah, I mean, look, we got this coming up. You know, we got the government shutdown and the benefits that could be, you know, not, you know, they might not have the money, you know, unless they, you know, get this passed right now between Democrats and Republicans for raising the debt ceiling and, you know, putting some cash in the kitty to get the SNAP program paid, and, you know, all the programs. There's a ton of programs, a ton of money that needs to go out all the time. And so they got to do this. They got to get along, and that's coming up very, very soon. So that is something to kind of keep an eye on. Now, I'm going to try to go through stuff kind of quickly. So yeah, I do just want to bring this up because it's in the news section. Jack Dorsey's Square changes corporate name to Block. So, you know, I'm a Square investor for long term and trading, and it's just been going down. And I hate that all these really wonderful companies, and I'm sure you're feeling the same way, all these really good companies that you really, really, really like are going down. And you're probably like, why? Like, why is PayPal down at 180? Why does Square go down so much to 194? Why did Unity Software drop 20 bucks? Why is Asana dropping? I mean, honestly, like, I'm going to walk you through some charts, but about 95% of the charts are all showing bearish. We want to trade with the trend. We don't really want to like fight the tide. Remember, we're not salmon, okay? You know, you know, it takes a lot more energy to climb the hill than to just get on your cardboard and slide down the hill. You know, it's a lot easier to kind of go with the trend, and the trend is going down. You know, so it probably would be prudent to, you know, maybe go short, you know, instead of going long, you know, instead of going through your watch list and seeing 40 of them red and 2 of them green and trying to get the right one to go up, which I was able to do, but that's not for everybody. That's, you know, that's like some masterful skill. Going short is a heck of a lot easier right now in this kind of market. But yeah, I mean, covered calls, puts, shorts, I mean, that could be like the thing right now. And, you know, let's just kind of take a look at some charts. And here's an example. Let's just start here. So Salesforce stock has worst day since beginning of pandemic after disappointing earnings forecast. One of the Jedis in the Wheelhouse Wednesday brought this up in the group in front of everybody, and I didn't even know. But I looked at the chart, and then he sent me this article, and I looked at it, and it blows my mind. And it's exactly what I teach in the courses about acceleration and deceleration and the maturation cycle from value to momentum. To, you know, institutions hiring analysts that do estimates, and then another earnings beat, and then a surprise, and then more momentum, and then you know, beating analyst estimates, and that value stock ends up going the distance into a growth stock. And then once they miss, it becomes deceleration. So these guys, look, Salesforce shares fell 12% on Wednesday, their steepest drop since March 2020 when the pandemic hit. On Tuesday, the company reported better than expected revenue and profit, but its earnings guidance for the fiscal fourth quarter trailed analyst estimates. I mean, they beat, but their estimates are lower than what their estimates from Salesforce are lower than what Wall Street's estimates were. The same thing with PayPal. PayPal came out and said, hey, we did good on our earnings per share. Our revenue was down by less than 1%. And we're going to grow 18% in the next quarter. But the Wall Street analysts wanted more than 18%, so it tanked on top of the Pinterest deal, and then it shorts, and then, you know, not shorts, but stops were hit, and then it went under 200, and now people are shorting it. And it's just turning into a red bloody mess. You know, it's such a great company, and it's a shame. I mean, there's a ton of them. Palantir's a great company. It's a shame, right? SoFi, it's a great company. It's a shame. DraftKings, it's a shame. I mean, look at all these companies: CRISPR, Beyond Meat, C3.ai. I mean, they're just deep in the red. Baba. I mean, it goes on and on. Like I said, 70%. This was 2 days ago. It might be more. 70% of all the companies in the S&P are under the 50, and like 50 plus, maybe even 60 are under the 200. That's really bad. That's really bearish. That is definitely not just a warning shot, but that's like, you need to get a crew to patch the hole or we're gonna sink. Like, it's bad. So yeah, I mean, and Wall Street's already in on it. They're already shorting the market. They're already distributing. They're already selling off. I mean, all 4 of the indexes are down, and they're down bad. I was looking at the VIX. The VIX was high. I'm going to show you. I'm going to show you all this stuff. But check this out. Okay, so this is Salesforce. So let's just go look at Salesforce real quick, just so I can show you how dark and dirty it is. Okay, so we're on the daily. Look at this wick. This is like a Vanguard or a BlackRock or somebody huge that's like, we're getting out of CRM. Boom, a candle like that. Yeah, I'm sure there were stops in there, but I mean, the cloud is red, the ribbons are going red. I mean, this thing can start printing purple candles and we just go short on it, you know? We make money 4 times as fast going short, you know? Stop fighting this, this trend, you know? So, I mean, look, I want to show you this. Check this out. So the indexes. Okay, I told you in the last 2 or 3 videos, and I want to just keep going over this because it's very important. So on the daily, we went red on the cloud, and now we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. These are momentum candles. So 10 purple candles, and we tested the 200. We did wick up. It got pushed up a little bit, which is really good. But look, I'm just going to tell you guys straight up, like if the Dow breaks the 200, it's not going to be good. It does not do that very often. It has done it, and it's bounced back. Okay, I did it right here. It bounced back. The time before that was the COVID, and that wasn't a correction. That was a crash. Okay, it's flirted with it a few times before that, but look, the Dow falling below the 200 is going to be really, really bad. Okay, remember the Dow is loaded with 30 of the most influential companies in the United States. But then you got 500 of the biggest companies in the United States in the S&P. And the S&P is at the 50, guys. It also broke its long-term trend right here. So it's above. It wicked below, it pushed back above, but it's at the 50. That's dangerous. I know that the NASDAQ's also down at the 50 area as well. So, you know, is this the beginning of a bigger problem? It could be. It's a little strange that usually like when this happens, then you get a long, long run. Maybe even longer, to be honest. Yeah, you get a long run before another one happens. You know, but this just happened. We got a short run, and now we're having this again. Strange, right? Look at the Russell. The Russell never got it together this year. It had this big, big run, and then it's just consolidated all year. It had a breakout, got really exciting. That's your Palantirs, your SoFis, you know, it got really exciting there. I was having everybody buy, we made a bunch of money, and then boom, it fell back in the channel, and boom, it fell even further down through the 200. This is bad, guys, and like I said in yesterday's video, and I'm gonna reiterate it because I know that I'm correct about this, the first stuff to sell off is gonna be like momentum, speculative, and SPAC, okay? That is why AMC went down. All your little ones are gonna get crushed right now. Why? Because people are going to be moving that to flights of safety, which would be cash or your Apples and Microsofts and your mega cap type stuff. So the second thing to go after that is going to be your Russells, your mid caps, your small caps, your growth, your tech. Like that stuff is going to get rattled right now. All that Russell stuff is going to get hit. The NASDAQ's going to take a licking when bond yields go up. Now there's a big choice. Like, if COVID is really infectious and there's a lot of problems and it does come down to a lockdown, which I personally don't think it will, but I don't know. I don't know. Like, I'm not a doctor. I'm not in the loop. I don't know. I'm going to have to find out from the media. But let's just say worst case that happens and it becomes this like really bad situation and they go back to lockdowns. Well, now we're in this whole other situation and I'm going to try to walk you through a few things. What if, this is a what if that happens and now people, you know, they're not at work, the Disneys, the Airbnbs, those are falling, the stock market is crashing, like it's falling bad, and the Fed wants to prop it up, but if they print more money, they're going to have more inflation. And so now banks they're like in the unknown, like, hey, if they print more money, then, you know, the rates are going to stay low and banks aren't going to rally. And again, this is a what if. I'm not saying it would. I'm just giving you like, you know, what if? You know, what if there's lockdowns? You know, and then this whole group gets tore back. Stay at home goes up. You know, now the Fed is in a real sticky situation. They're like, well, if we print more money, we're going to have more inflation, and we can't even make that decision on our own because we need to talk to all of our allies around the world because it's going to affect everybody globally. And if we don't do it and the stock market crashes, well, we're also in a sticky situation because it's going to affect every like global markets and all of our allies as well. So we're kind of in a conundrum right now. You know, I'm speaking as if, you know, this is the Fed there. That's what they're probably thinking. And what you got to understand is that there was a pandemic, okay? The pandemic created a lot of fear. People sold. This was a crash, not a correction. Okay, this is a V-shaped recovery because of emergency action, okay? Stimulus, lots of it was put in the market. There was stay-at-homes. People didn't know what to do with their time. They jumped in the market. All that extra money, trillions of dollars went in the market, and it was a heyday. We made a fortune, right? Everybody made a fortune last year. And boom, on and on and on, another stimulus came, and boom, 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 boom. And, you know, this is propped up. This is manufactured. This is a balloon blown to the very top, and all it's going to take is pop, and, you know, it can come down. And you know, it might only come down something like this or something like this, but the way that markets work is every so often there's a crash, and there's the 4 market phases. Okay, so the 4 market phases happen in crypto and stocks, and they happen on every stock and every crypto, and they have happened since the beginning of time, and there's no way to get around it. It's just the way it works. So this is crash, okay? It comes up above the 200, and this is accumulation. This is where Wall Street starts to accumulate, okay? And then there's the participation phase where retail comes in with Wall Street, okay? And then there's distribution, where distribution goes boom, it comes up, fakes you out, goes boom, comes up, fakes you out, and goes boom. And it does this whole number backwards. Comes all the way back down. Comes all the way back down to where it's supposed to belong, where the market feels it's supposed to belong. Then eventually, the EMA will flatten out and it'll change. So instead of going up or going down, it'll flatten out and it'll go back to accumulation. It goes up, and then across, and then down, and then across and up, and it just goes in those 4 phases. It's the 4 market phases. So, is this the beginning of a distribution? Well, I can tell you right now, yes, it is. It's the beginning of distribution, and it's happening on all 4. Is it a crash? I don't know yet. I need more information. But it certainly is strange that it's happening right here after this. Now, it could be something like this one, you know, February through May, where it had like that double bottom situation, and this is the beginning leg, and here's the middle, and we're going to bounce off. That could happen. I mean, we just don't know. This also could be an M, where it kind of tops and then falls. We don't know. But with COVID and inflation and, you know, a lot of different economic issues, remember, if there's a problem with the economy or there's a problem with the 30 biggest influential companies, it will show up in the Dow. I'm going to keep saying that until people realize, damn, that guy knew what he was talking about. So, look, we're flirting. We got a pivot low. We're flirting with the 200. It's not good, guys. Again, the SPY down by the 50 broke its trend line. The NASDAQ now down here. The Russell is just already like, this is already bearish. This is already time to go short. Like you've already dropped through the 200. All you got to do now is just confirm going through this bottom floor, and it's on. And basically, this is what accumulation looks like. This is what participation looks like. This is what distribution looks like. And this is what the 4th one looks like if it plays out. So, you know, now check this out on the VIX. This is crazy. So I told you guys the other day, I think it was yesterday, you know, we hit the same peak where we hit on those 2 major drops. But look, it got way higher. It dropped to 32.61 today. It's up 67.49% for the week. That's extreme fear. I mean, that's not good, guys. So yeah, I mean, my thoughts is that it is grim. You have distribution on all 4. All 4 are going down. They're not diverging anymore. They're not moving from the NASDAQ to the Dow and the Dow to the S&P. They're all coming down. And this is what I think is going on, and I'm pretty sure I'm correct about it. I mentioned that Wall Street is like day trading with like huge amounts of money, you know, hundreds of millions of dollars, a crack, boom. And that's why it's not like sector rotation. It's like happening every hour, in and out. They're day trading with huge money. I mean, there are prop traders, there are big Wall Street traders, believe me. And the distribution means they're pulling their money out. They want to be first out the door so that they can capture all their gains because they accumulated, participated, and then they want to distribute at the top before, you know, something bad happens. Then in the interim, they're going to day trade huge. They're going to boom, make money, create momentum. I'm going to find it. You're in the Jedi. You're going to find it like I did today with the guys, and we're going to ride that up, and we're going to get out like technically and just quickly, and no big deal. Like boom in, boom out, make our money, take it to the side, see what happens the next day. Maybe we trade, maybe we don't. But what I will say is they are playing this game, and you always got to know what the game is. If you don't know what the game is and you don't know what the rules are, you can't ever win, okay? So the game and the rhythm right now is they buy in the after hours to make it look good in the futures. And I bet if I look at the futures in the after hours, it's probably green right now. And then in the morning, it'll probably be good for a little while. And then they will start to sell off intraday like they did yesterday. Now, I don't know for sure, but that just seems like maybe that's the rhythm. And I remember multiple times in the past where this was one of their little aces up their sleeve that they do. And, you know, they keep you off guard so you don't know what you're doing. You're either panic selling or you're just making moves you shouldn't be doing. So what I think is they're trying to double down on their money so they can get out. So let's say they have something that's dropped and maybe they're not, you know, where they want to be. They'll double down on it, get the momentum, get retail to come in, push it up, and then they'll get their money out and pull it all out and you'll fall with it. So you got to be super careful. And if you don't have somebody to talk to in these tough times and stressful times, hit me up. I'll talk to you. I'm a cool dude. I'll talk with you. I'll DM with you. You can come in my Discord. You don't even need to pay for anything, okay? Just come in. I invite you in. I would love to meet you. Come in there, meet everybody. Everybody's super cool. We got a cool community. If you do decide to upgrade, you can upgrade to just the alerts, which would be amazing for you. And I got some real good plays. Like right now, I have a strategy and a playbook that is highly focused and it's set to win. I'm not trying to lose my money, and my alerts are real. Like when I make an alert, it's because I'm buying or selling. So you got that. That's cheap. It's $49 a month. And then if you want full Jedi, you want all the courses, you want, you know, the one-on-one coaching with me, you want to be with all the other Jedis in the Jedi area, which is just sick. I just think you should do it. But it's $99 a month. Oh, actually, no. Instead of that, you can do the annual right now. And check it out. I'll put the code up right here. And it's WHTBF. I'm doing the Black Friday deal. So instead of the $99 a month, which is almost $1,200 a year, you can get it for half, for like $600 for the whole year. And you get everything. And that is a deal because it's got to be worth at least $25,000 plus. I mean, the courses, the coaching, like the knowledge you're going to have for the rest of your life. So you'll like that. And while I'm at it, if you don't mind, hit the like and hit the subscribe and select all on the video because, you know, I'd like to, you know, have you on the channel and I like to have you, you know, checking out the content, making comments and stuff. So that'd be cool. But yeah, look, it's not looking good out there. When I go and I look through, charts, I mean, it just seems like that one's not so bad. Let's just look at them. That one's not so bad. This one's starting to get bad. It's just, look, it's at the 200. Ribbons are going red. Disney is low, but I think, you know, Disney could come right back down to 117. Don't think it could be over. This is kind of momentum. When you go under the purple, people go short. The ribbons are red, guys. The cloud is red. The momentum is strong. Like, believe me, if it's a propped up market through stimulus and there's no more stimulus and now there's uncertainty and they're distributing and taking their gains, don't be the last one. Don't be the one that has to go get 3 jobs and is fighting with his girlfriend at night, you know, and has a baby crying in the corner. Don't be the last one. If you don't know how to navigate, you need to get with me. I've been through all this stuff. Like, I know how to deal with it. Like, trust me. Like, you gotta just know this might not be over. You know, there's a lot of them. Look, this is red. It's making lower highs. I mean, look, CCJ, let's just see what it's doing. It's starting to turn. Peloton, I mean, it's destroyed. Lower highs, red ribbon, waterfall sell-off. DraftKings, same thing. Most of the stocks in the stock market are, I mean, look, it's below where it was. Here, I mean, essentially, it's at the same price that it was in May of 20. I mean, almost a year and a half ago, basically a year and a half ago, guys. So that's erased a lot of gains. I mean, look, DoorDash, I mean, that thing has just gone red on the ribbons, red on the cloud, momentum under the 200. GNOG, this is golden nugget, red cloud, momentum going down. I mean, look, these are ugly lower highs. Ader, I mean, just down. I mean, this is like, instead of trying to fight it going up, why don't you just go short and trade with the trend? I mean, that's what the institutions are doing. That's what the pension funds are doing. That's what they're all doing. Well, I don't know the pension funds, but that's what the institutions and hedge funds are doing. Look, this one is about to go red on the ribbons, already red here and breaking multiple supports. I mean, Asana, you guys know AMC. I mean, that thing got wrecked today. Like I said, the most speculative and momentums and SPACs are going to get hit pretty hard, you know. So, look, it's not looking good. You know, it could be a fake out again in the morning, just like I said yesterday. Just don't do anything, you know. Don't try to trade in and out unless you're highly skilled at it, you know. It can be very, very dangerous. So let's go look at, you know, I haven't looked at this. Look, when you pull up any watch list and like they're all red, that's a sign of, well, that's just the sign of what a bear market can look like, okay? So look, Upstart. I told you guys the other day, the Upstart moves like 25 bucks a day, up and down. Well, there's $25 down. I mean, boom. Just imagine every single chart that you see blue ribbons on, it can go all the way back down with red ribbons. That's how it works. You know, it makes mountains. Let me just show you a mountain. I'll give you an example. I'll show you what a mountain looks like. Let's pull up Baba. That's what a mountain looks like. Okay? Come in here. Comes down. Finally get above the 200. Does a wiggle wobble? That's what it always does. It gets above the 200. They accumulate. Secondary trend, participation phase. Distribution. The first lower high, which is right there, that first candle, and notice that's a huge long candle, because I know what I'm talking about. First lower high, first purple candle, it's a huge long one. That's where they go short. And they just go short the whole time to the tune of 200%. It goes from 320 to 120. Boom. They're making a fortune on that going short. Why aren't you? You know what I mean? That's what I've been asking myself. Why are you trying to, like, you know, help everybody to go up when everything's going down? Why don't you just have everybody go down with it? I mean, trade with the trend. I mean, you know, you got to make money. Make money the way that the market's going. The market, you got to listen to the market. You know, the market's saying we're going down. So might as well just capitalize on that. You know, this thing is like, and when it goes down fast and hard. I mean, it can take you 2 years to go up what can go down in like a month. So, I mean, look at this. Think about this. If you went short here at 1888 and now it's at 868, that's over 100. That's like 120%, 110%, something like that. And let's just see how many days that was. November 5th to December 1st. Okay, we're talking about 25 days, over 100% profit if you went short. SoFi, great company. I have no idea why this is getting so wrecked, but it is. You just gotta know that. Moderna, kind of all over the place. Tesla, I'm actually like a little curious about Tesla. If we're actually creating an M pattern and going to drop hard and making lower highs, it's really at a decision point. It's either going to go up and break up, or it's making an M and it's going to come down. And that, we're just going to see what happens there. If you do go short, you want to do the opposite of what I usually say, which is find leaders with great earnings. You want to find laggards with like shit earnings, and like, you know, you want to find stuff that is, you want to find laggards and like growth and mid cap and the Russell and like stuff dug in there. You know, you don't want to go short on like the apples and stuff. You want to go short on like, you know, weird stuff like well, like Wish Wish is probably one of them. Yeah, look. Whoa. Think about that. You saw the first lower high, you saw the first purple candle right here at 28 bucks, and you went short. It's down at 336. 3 times, what is that? 3 times, that's 900%. You would have made 900% on your money going short on that. That's crazy. So yeah, that's the kind of stuff I'm just kind of trying to put out there and let you know about. You know, like, I don't know if we're crashing, but we definitely have a lot of signs of the beginning of some serious turmoil. We'll have to see what happens. Again, we need to wait for the media cycle on this Omicron. Inflation stuff is serious, not going away. 95% of all the charts are bearish. Over 70% of the companies in the S&P are below the 50. 50-60% of companies are below the 200. There is distribution that's obvious on all 4 macros indexes. You know, I know how to get through all this. Again, jump in the Discord. You know, I'd like to meet you. Just click the link. It's in the description. You really would benefit. It'd be better to invest a little bit in yourself to become a Jedi into the courses and the one-on-ones than like lose money every day in stocks and crypto and not knowing what's going on. I wish that I have mentors, but there was a time when I didn't, and I didn't really know that much. And you know, I had a bunch of money and I was just making moves that weren't that great. And I didn't know a fraction of what I know now. So I can help you, you know, if that's something you're interested in. And let's see, we talked about, yeah, I mean, look, just real quick. So right here, there's like really good companies. One of them that I own that really just sucks. It just sucks that this is happening, but it is what it is. So Facebook. So Facebook here, I really thought I was going to climb this trend and these were going to turn blue, and the cloud was blue, and then it just got tanked, right? So it fell out of the pattern through the 200, and I had bought here at 313. It was like 313 where I bought. And then it did this, and I bought more, so my average is like in the middle, and today it actually went to red, and it was green. So Facebook, great company. Now I got to make a decision. Square, such a great company. It's at 194, guys. And here's the thing. This thing is, you know, it doesn't have to turn right now. I mean, this was a pretty parabolic run with the stimulus and propped up market and whatnot. I mean, this thing could turn around, sure, or this thing could fall. I mean, you never know when there's something serious. I mean, look, in the .com bubble, you know, the NASDAQ, I think, dropped 80%. I mean, in the COVID, what was it, 30-40%? So, I mean, this was at this price right here, and this price, every 100 shares is worth $10,000 less. Okay, so it could come down to here, 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 it could come down to here. It's the way it works. This looks like distribution. And then it does this whole number over, and then it starts over. I mean, that's just how it works, you know, and it's a damn shame. Look at this, great company, parabolic run. I mean, this thing was just, people were printing cash, and now look at it, boom. There's too many stocks that look like this. And they're under the umbrellas of the indexes, and all the indexes look like this. So remember, you're not a salmon. You don't need to swim upstream. And remember, the salmon was the most unhappy fish ever. He or she, well, the king salmon, the female actually holds the eggs, and so we'll talk about the female king. But basically, she's born in a river, and she goes out to the ocean, and she lives in the ocean for 5 years and gets strong and eats other fish, and you know, that kind of thing. And then 5 years later, she comes back to the river that she lived in, and she goes to the exact same spot, and she lays her eggs, and then she dies. And she never meets her parents, and she never meets her kids, and she's the most upset fish. And except for the Kenai River. The Kenai River in Alaska, where the world champion derby fish are, the big ones, they're bigger because they go to the ocean, but they don't come back for 7 years. That's just a little fun fact for you. But anyways, yeah, you're not a salmon. Don't. This is the upstream. This is good. You're in the blue rim, but now everything's turning red. So you wanna go downstream. It just is what it is, whether you want to or not. That's just the way the market is. You got to listen to the market. Look at this, Unity. I mean, guys, Unity went down $21 today. I mean, this is gnarly. This went from 209 to 151. We're talking about a $60 drop in a matter of less than 2 weeks, like 12 days. $60 drop in less than in about 12 days. That is wild, guys. Even Nvidia took a nice, well, you can't really see it yet, but it took a pretty dark drop today, $12.50 relatively. So yeah, I mean, there's a lot of them. I mean, look, Unity, AMC, even Tesla had a pretty bad drop. Square, Facebook. I mean, they're all red, you know. So look, I'm not going to make it as long as I wanted to, but you got a lot going on in the news cycle. You got a lot going in the macros. You got a lot going on in the underlying weakness of all the charts. Fundamentals aren't playing. Going upstream's not working. The rotation is happening like every hour instead of every, like, you know, 6 months or whatever. It's really, you know, you got massive day trading momentum going on with Wall Street. You have them pulling their money out. Inflation fears, global problems, you know, uncertainty, you know, interest rates possibly being hiked, but maybe not. What if there's a lockdown? So we just don't know. And then you got so many stocks at their 52-week lows. I mean, this is like warning shot after warning shot after warning shot after warning shot after warning shot. Like, it's not looking good right now, okay? So I don't know exactly what's going to happen, but it doesn't feel good, and it doesn't look good in the markets. And, you know, the best thing to do is either stay out, take your profits, put it to the side if you're profitable. If you're a little bit down, it's not the worst idea to just take the loss, put it on the side. If you're way down, you got to make a decision what you want to do. And, you know, definitely don't be like trading in and out, like, you know, unless you really know what you're doing. And if you do, then that's, you know, that's cool. Like, I'm stoked for you. But, you know, please don't if you know, if you're going to be like losing a lot of money, and you'll know right away, I would assume. So just be careful. It's a crazy market. Wait for the news cycle and the dust to settle. I don't know exactly when that's going to be. I heard that it could be 100 days before they really test the efficacy of the vaccine on people with Omicron. So we just don't know. I mean, 100 days is like over 3 months. I mean, you know, so just be careful out there. Click that Discord link, subscribe, hit the like, select all. And, you know, I'm here for you if you want somebody to talk to you. You know, I'd love to help you out, coach you, and I'm there for you. That's why I set up the Wheelhouse Trading and the YouTube. I was retired. I didn't need to do all this, but I just felt like people needed help. They were being steered the wrong way by certain people, and I didn't want everybody learning the wrong way and holding all these bags and getting themselves into trouble. So that's why I came out of retirement to do this, you know, and help people out. So I'm here for you guys. So I appreciate you, and you know, I appreciate you guys watching this whole time, and you know, welcome to the Wheelhouse.